Mark had always believed he understood money. He had worked hard, saved steadily, and followed every rule he had practiced since childhood. But the day he lost almost everything was the day he realized he understood nothing at all. The market had swallowed his savings with silent indifference, as if years of hard work had amounted to nothing. That morning, as he stared at the red numbers flashing across his screen, he felt a strange mixture of panic and shame, a feeling that seeped deep within him and wouldn't go away. For hours, he sat transfixed at his desk, replaying every choice he'd made over the past 2 years. He'd chased the big headlines, imitated influencers with impeccable confidence, and spent money on things he barely understood. Each decision seemed smart in the moment, but the result was always the same: losses disguised as lessons. The worst part wasn't the disappearance of the money. It was the quiet realization that he'd never truly been in control of anything. That night, unable to sleep, he went into the living room and collapsed on the sofa. The world outside hummed softly through the window, but Mark felt strangely disconnected. He closed his eyes, rubbed his temples, wishing for a reset, a voice, a guide, anything that could make sense of the confusion in his mind. And then he heard footsteps. Mark's eyes snapped open. In the dim light near the bookcase stood someone, an old man in a simple suit, his posture calm, his expression measured, as if he were carrying decades of thought in one breath. There was something undeniably familiar about the man, something Mark had seen countless times in old photographs, articles, and investment books. The man smiled gently. It was a rough night, wasn't it? Mark's heart pounded in his ribs. Who are you? You already know, the man replied, sinking into the chair opposite him. You've read my work. You've tried to follow my principles. Still, I must say, you've done some pretty creative work without considering anyone. It took Mark a moment to grasp this, but when he did, he flinched sharply. Benjamin Graham? He whispered. The man nodded, but there wasn't the dramatic tone Mark would have expected from someone who shaped generations of investors. Graham looked almost amused, as if he had stepped out of a silent library rather than history itself. I'm here, Graham said, because you've finally reached the point every investor reaches sooner or later, the moment when loss forces clarity. Mark swallowed. Why now? Because you're finally willing to listen, Graham replied. And you need to understand the mistakes that got you here. The market didn't ruin you, Mark. Your choices did. A pang of shame clenched in Mark's chest. He wanted to argue, to defend himself, but he couldn't. Every mistake Graham hinted at echoed painfully in his memory. Graham leaned forward slightly. Tonight, we'll cover 7 investing mistakes that are silently draining your wealth. The ones no one warns you about. The ones you repeat over and over without even knowing it. Mark let out a shaky breath. What if I fix them? A faint smile touched Graham's lips. Then you'll stop losing money. And more importantly, you'll stop losing yourself in the process. The room felt heavier, yet strangely calmer. For the first time that day, Mark felt a glimmer of hope pull him forward. Let's begin, Graham said softly. The first mistake is the most human. Graham clasped his hands and studied Mark with the calm patience of someone who had seen countless generations of investors repeat the same mistakes. The first mistake, he said, is letting fear decide for you. Mark stiffened. Fear? He wanted to deny it, to claim he was simply reacting to a changing market, but the truth was weighing down on him like a weight. He remembered selling too quickly every time, panicking at every drop. Graham continued, his tone firm but not unkind. Fear is the most expensive advisor you can hire. It charges interest on every doubt you feed it. Mark frowned. But how can I stop being afraid? The market moves so fast. One bad day can wipe out months of gains. But if you react to every tremor As if it were an earthquake, Graham replied. You're afraid because you never defined what matters. A sensible plan, a margin of safety, a purpose beyond price action. He stood up and walked slowly to Mark's laptop. It was still open on the table, red numbers glowing like warning signs. See this? Graham pointed. It's not danger. It's noise. But because you don't have a plan, every fluctuation feels like a threat. He looked at Mark. Fear thrives in undefined spaces. Mark lowered his gaze. So what should I do? You have to learn to distinguish between temporary storms and permanent damage, Graham said. Most investors never do that. They run from every shadow, then wonder why they can't reach the other side. He returned to his chair, sat down, and crossed his legs thoughtfully. The second mistake, he continued, is the opposite of fear, overconfidence. Perhaps the more dangerous of the two. Mark's stomach churned. He knew exactly what Graham meant. Times when he felt unstoppable. Victories that made him feel like a genius. Risks he justified because they felt good. You believed you were smarter than the market, Graham said, just because you had a few victories. And that belief made you reckless. You bought into research. You relied on momentum instead of value. You relied on hope instead of discipline. Mark's voice cracked. It felt right. Everyone on the internet was doing the same thing. Graham raised an eyebrow. What if everyone on the internet decided to jump off a cliff? Mark let out a breathy, shy laugh. Yeah, I get it. The third mistake, Graham said, comes from the same place. Chasing stories instead of examining facts. You bought stories. You bought excitement. Mark winced. I thought stories had a point. Stories have a place, Graham said gently. But numbers tell the truth. And you refused to look at them because stories made you feel better. His voice softened, and he leaned forward. You weren't stupid, Mark. You were human. People seek solace rather than clarity. Excitement rather than proof. That's why so many people lose money. They invest in emotion rather than fundamentals. A long silence fell between them. Mark felt exposed. But for once, he wasn't being judged. Graham wasn't mocking him. He wasn't angry either. He was simply showing him what he'd overlooked. Graham clasped his hands together again. Now, before we move on to the next mistakes, I want you to understand something important. Mark looked up. You're not beyond repair, Graham said. Every great investor starts exactly where you are. Humble, uncertain, and forced to confront uncomfortable truths. That's where true discipline begins. Mark swallowed hard. I'm ready, he whispered. Graham nodded slowly. Good. Then prepare yourself. The next mistakes will run deeper than the first three. Graham leaned back slightly, his expression becoming more serious, almost serious. The fourth mistake, he said quietly, is confusing activity with progress. Mark frowned. Activity? I mean trading too much. Not just trading, Graham replied. Checking prices hourly. Jumping from strategy to strategy. Watching every rumor, every headline, every forecast. You believed that movement meant momentum, but all it did was make it harder to focus. Mark's shoulders slumped. I always felt like I'd fall behind if I wasn't constantly involved. There, Graham said, that's the trap. The market rewards patience, not hyperactivity. You were sprinting through a marathon, then wondering why you were exhausted and lost. Real progress happened slowly, quietly, almost invisibly, but you were forcing it to be more hasty. He paused, letting the words sink in. And then comes the fifth mistake, he said, his voice lowering. Letting emotion make decisions that should belong to logic. Mark closed his eyes, already knowing where this was going. You bought because you were excited. You sold because you were scared. You acted because someone on the internet looked confident. Every choice you made was based on emotion, not analysis. Mark rubbed his face with both hands. I felt like I couldn't stop myself. That's exactly why you lost, Graham said gently. Investing has room for patience, discipline, and humility, but never emotion. Emotion clouds judgment. Emotion dramatizes normal events. Graham crossed his arms. You must understand, the market is not your enemy. Your reactions are. Mark sat still and stared at the floor as a silent weight settled over him. It wasn't defeat, it was realization. Graham continued. The sixth mistake is subtle but devastating. Ignoring hidden costs. Mark looked up. Hidden costs. Yes. Fees you didn't account for. Taxes you didn't plan for. Spreads you didn't notice. Small losses you said weren't important, but added up to thousands of dollars. Graham tapped the side of Mark's laptop. You only looked at the price chart, never the true cost of your actions. You didn't see the cost of every impulsive move. Too many trades. Changing strategies. Forgetting the long-term consequences. He sighed softly. Most investors lose more from silent costs than from bad ideas. Mark leaned back slowly, absorbing every word. These weren't just mistakes. They were patterns. They had shaped his entire investing life without him even realizing it. So what now? Mark asked. Graham studied him thoughtfully. Now comes the final, most devastating mistake, the one that undermines everything. But it can't be explained in a single sentence. You must not only hear it, you must understand it. Mark's pulse quickened. What is it? Graham stood, pacing slowly around the room. The seventh mistake, he said, is the one that ruins even brilliant investors. The one that steals decades of life without people even realizing it. He turned, his gaze sharp but not merciless. You have no system. You have no rules. You have no structure. You have no discipline that guides your choices. Mark winked. I thought I had a system. No, Graham said firmly. What you have is chaos disguised as confidence. When emotions run high, markets shake, uncertainty strikes, a real system protects you. Without a system, you're like a leaf in the wind. You're blown whichever way the market blows. A long silence followed, only the faint hum of the city outside. Mark felt the truth settle on him like a weight, not crushing, but stabilizing. A foundation. Graham finally spoke again, his voice softer. Before this night is over, I will teach you how to build a system that can change your life. But first, you must fully understand what it means to live without a system. Mark nodded, his breathing evening out. I'm ready, he said. Graham's eyes warmed with approval. Then let's continue. But there was something else my father used to tell me, something he rarely shared outside our family. Money doesn't make you wise. Pressure does. I didn't fully understand it then. I thought he meant that stress builds character or that hardship forces you to grow. But as I watched the markets move, as I observed men with fortunes larger than nations tremble at the slightest fluctuation, I realized what he had truly meant. Pressure reveals your real relationship with money. Some people spend their entire lives pretending they're in control, pretending they're calm, rational, immune to fear. Then one bad headline hits the market, one unexpected earnings call, one geopolitical tremor, and suddenly the mask cracks. You see the truth underneath. I watched this happen again and again. Men who built empires out of spreadsheets and forecasts, suddenly paralyzed by whispers of recession. Traders who bragged about being emotion-proof, panicking over a 0.5% drop. Entire boardrooms losing their composure over a rumor that wouldn't matter in a month. And every time it happened, I remembered my father's words. Pressure doesn't create your character. It exposes it. That's why, when I finally had enough money to be considered wealthy, truly wealthy, I didn't feel triumphant. I felt uneasy, because now I had something dangerous, comfort. Comfort dulls clarity. Comfort whispers that risk is optional, that fear is distant, that discipline is a luxury instead of a necessity. I fought that comfort every single day. That's something few people understand about the ultra-rich. Wealth doesn't make you fearless. If anything, it often makes you more afraid. You're no longer climbing, you're clinging. You're no longer dreaming, you're defending. The fall becomes steeper the higher you rise. But I made a promise to myself, a promise rooted in those early mornings studying the markets and the late nights listening to my father. I would never let fear manage my decisions. I could feel it, acknowledge it, even study it, but never obey it. Which leads me to the deepest truth of all, one I learned not from economists or books or even my mentor, but from decades of watching intelligent people crumble under the weight of their own fortune. Money amplifies who you already are. If you're disciplined, it gives you power. If you're reckless, it gives you destruction. If you're insecure, it gives you paranoia. And if you're greedy, it gives you ruin. I saw this truth most clearly the year I crossed my first 100 million. People think that moment feels like fireworks, like victory, like some kind of spiritual milestone. It doesn't. It feels like a mirror being shoved in your face. A painfully honest one. Suddenly, every insecurity I had ignored became louder. Every flaw I had minimized became sharper. Every impulsive thought became more dangerous, because now it came with leverage. I began to understand why so many wealthy people make catastrophically stupid decisions. It's not because they're careless. It's because wealth magnifies every internal weakness until it becomes impossible to outrun. If you're obsessive, money fuels the obsession. If you're anxious, money gives you new things to fear. If you're arrogant, money becomes gasoline on the fire. And if you're empty, money will never fill you. It will just make the emptiness echo louder. I spent years observing this phenomenon. Boardroom after boardroom, strategy meeting after strategy meeting, I watched intelligent people sabotage themselves in slow motion. Not because they lacked information, but because they lacked self-awareness. One billionaire I knew lost half his empire because he refused to admit he was wrong about a single market trend. Another burned through $250 million chasing an investment that made no logical sense, simply because his ego couldn't tolerate backing down. None of these stories made headlines. They happened behind closed doors, away from the version of wealth the public sees. But they shaped the way I thought about money more than any textbook ever could. That's why I built my rules. Rules I lived by long before I ever became rich. 1. Never believe you're smarter than the market. The moment you do, the market punishes you. 2. Never make decisions when emotional turbulence is high. Fear and greed speak loudly, but they speak lies. 3. Protect the downside before you dream about the upside. A single disaster can erase 10 brilliant years. 4. And above all, study your own mind more than you study price charts. Because the biggest risk isn't volatility. It's the person staring back at you from the mirror. Of course, I didn't always succeed in following these rules. No one can. But understanding them, truly understanding them, became the foundation of my career. And the truth is, the moments that shaped me most weren't victories, but failures. Because failure, real, painful, humbling failure, is the one lesson billionaires never talk about publicly. It's the one thing success stories ignore. But it's also what creates a mental shield. And I would need that armor for what came next. The turning point came on a quiet Tuesday morning. One of those days that seems so ordinary, yet somehow transform your life. I was sitting alone in my office, the city spread out beneath me like a glittering map where decisions await. Deals lay on my desk. Money flowed as predictably as gravity. And yet, something was wrong. It wasn't dramatic. It wasn't like a crisis. It was more like a whisper of imbalance, a slight tension I couldn't explain. Benjamin Graham used to warn that wealth tricks you into thinking calm means security. In reality, calm is often the calm before the storm. That storm came faster than I expected. At first, it was just a rumor, a potential downturn, a shift in market sentiment, a subtle shift in the market's rhythm. Most people ignored it. A few analysts dismissed it as noise. And frankly, I wanted to believe it was nothing. After all, when you've been winning for so long, you start to assume the universe will give you a warning before it strikes. It won't. Within days, the markets behaved like an animal sensing danger before the predator emerges. Prices twitched. Liquidity dwindled. Confidence was shaken. The world wasn't crashing, not yet, but the first domino had already fallen. And I was exposed. Suddenly, the risky position I defended, just this once, no longer seemed small. A leveraged game I'd convinced myself was under control became a sharp knife pressed against my throat. I could hear Graham's calm but frustrated voice in my head. An investor's worst enemy is often themselves. I wish I could say I reacted with perfect logic, but I didn't. My hands were steady, but my mind was at war. Pride battled fear. Logic battled ego. And somewhere in this mental chaos, I remembered one of Graham's lesser-quoted pieces of advice. When pressure mounts, broaden your perspective, not your position. So I stepped back. I turned off the screens, silenced the noise, and asked myself a question almost no one asks in the heat of risk. If I were starting from scratch today, would I still make this decision? The answer came instantly, and it was devastating. No. That admission hurt more than any loss could, because it meant I had violated my own discipline long before the market punished me. I spent years building a fortress of rationality, and I had let a single crack form. And cracks, no matter how small, never stay small. I moved fast after that. I cut positions I secretly hoped would rebound. I fortified the ones worth saving. I took the losses I didn't want to swallow. Every action felt like stitching a wound, painful, necessary, urgent. By the end of the week, the damage was contained. Not erased. Contained. And survival, Graham would say, is victory in its purest form. But the real change wasn't financial. It was internal, because for the first time in a long time, I felt something I had forgotten: humility. And humility is the one currency that grows in value the longer you hold it. What I didn't know, what I couldn't know, was that this moment of humility would be the foundation for a far greater test waiting just beyond the horizon. In the months that followed, the markets calmed, but my mind didn't. Something had shifted inside me, subtle but undeniable. It felt like walking through a familiar house and noticing a door you had never seen before. You don't know what's behind it, but you know opening it will change you. I found myself re-examining choices I once viewed as untouchable, deals that I had labeled brilliant, risks I had justified with confidence disguised as logic, profits I had celebrated without questioning whether they were the product of skill or luck wearing a convincing mask. Benjamin Graham often said that the market is there to serve you, not instruct you. But the truth is, the market does teach, brutally, subtly, relentlessly, if you're willing to listen. And for the first time in years, I was listening. One evening, long after the staff had left, I stayed in the office reviewing a decade of my private notes. I found patterns I had never bothered to see before. Wins often came from discipline. Losses almost always came from emotional drift, a momentary lapse, a quiet rationalization, a blind spot conveniently ignored. There's a strange thing that happens when you confront your past decisions. You start seeing the architecture of your own mind. You see where confidence strengthens you and where it betrays you. You see the gears behind your impulses. You see the places fear whispers the loudest. And slowly, painfully, you begin to understand the real enemy. It's never the market, never other investors, never volatility. It's the version of you that wants an easier story. As I read through my old journals, one entry stopped me cold. It described a deal I took years ago, a deal that had succeeded spectacularly. The world saw it as strategic brilliance. But reading my own words again, I realized the truth. I took that risk for the thrill, not for the logic. And I had been rewarded for it. That's the most dangerous outcome of all. A bad decision that works. A coin flipped wrong side up that still lands on your palm. It tricks you into believing you're invincible. It seduces you into thinking you're the exception to the rules. Graham warned about this endlessly. The market may reward your flaws before it punishes them. And when the punishment finally comes, it arrives in a way that feels personal, targeted, crafted specifically to expose the weakness you've been pretending not to have. That realization hit me harder than any financial loss I had ever taken. It wasn't regret. It wasn't guilt. It was something far more unsettling, clarity. For the first time in my career, I understood that resilience wasn't built from victories. It was built from honesty. The kind of honesty that leaves no room for ego, comfort, or convenient narratives. I thought the earlier downturn had been the test. I was wrong. It had merely been the warm-up. The real test, the one that would either break me or rebuild me, was already on its way. Quietly, invisibly. And I had no idea how quickly it was going to hit. Weeks passed, and the markets hummed along, deceptively calm. People around me started celebrating minor wins, as though short-term gains were proof of skill. I observed them quietly, noting the subtle shift in behavior. Excitement replacing patience, chatter overtaking contemplation, impulse sneaking back into logic's chair. It was the exact pattern Benjamin Graham warned against. I returned to the quiet discipline that had guided the early years of my journey. Reading when others scrolled headlines, thinking when others reacted, and waiting when everyone acted. The real work, I reminded myself, happens in stillness. It is in sitting with uncertainty that wealth is quietly assembled. Yet still, I noticed an unsettling truth. Many investors will never enjoy that kind of calm. They are wired for instant validation, for dramatic confirmation. The market offers none. Instead, it rewards patience, the invisible practice of letting time work quietly in your favor. During one late night, as the city lights blinked in rhythm with a restless world, I began to journal the patterns I saw forming in my own mind. I wrote about fear, not as an external force, but as a whispering companion that has haunted every investment decision I've ever made. Fear is subtle. It wears the guise of caution, prudence, even logic. It convinces you to act early, to sell too soon, to question the rules that serve you. And every time you obey it blindly, it collects its toll. Greed, by contrast, is loud. It shouts, dances, and seduces. It promises extraordinary returns with minimal effort. It convinces the mind that luck is skill, that risk is opportunity, that impatience is genius. The combination of these two, fear and greed, is the greatest psychological trap any investor faces. They are the twin shadows that obscure the path to real wealth. But even more dangerous than fear or greed is envy. I watched it in colleagues, in friends, in competitors. It is the silent poison that turns disciplined thinking into reactionary chaos. People measure their worth against others, not against the integrity of their own process. They abandon a methodical plan because someone else flaunted success overnight. Envy forces you to race in a marathon meant for decades. It hijacks reason with a siren song of comparison. I realized then that the hardest wealth-building work is invisible. It is not in spreadsheets, formulas, or trend analysis. It is in mastering the self, controlling the impulses that everyone else worships, sitting in boredom while the world chases excitement, saying no when the noise screams yes. enduring long periods of inactivity, not because it is easy, but because it is effective. The irony is that the path to real wealth is utterly dull to the untrained eye. It lacks fireworks, drama, or immediate gratification. Yet it compounds in the background, quietly creating a reality that the restless never see. I thought back to the investments that had paid off years later, the ones that had seemed insignificant at the time. Those decisions were not brilliant. They were consistent. They were disciplined. They respected the power of time more than the lure of action. It occurred to me that every investor faces the same fundamental choice: chase excitement and potentially ruin themselves, or embrace patience and slowly let time build what chaos cannot. Most will choose the former. It is human nature. But human nature can be trained, reshaped, refined through observation, reflection, and relentless honesty. The truly wealthy are those who have learned to outlast themselves. Morning came, but the city's energy felt muted, as though it too understood the importance of restraint. I walked through empty streets, coffee in hand, and noticed how easily people surrendered to immediacy. A man on a corner celebrated a stock tip he had received an hour ago. Across the street, a woman scrolled through news alerts, visibly anxious over a minor market shift. Their lives were dictated by the noise around them, a constant chase for validation from a system that thrives on distraction. I reminded myself of Graham's principle: the investor's chief problem, and even his worst enemy, is likely to be himself. It is deceptively simple, yet it contains a universe of truth. The challenge is not picking the right stock, timing the market, or even predicting economic cycles. The challenge is managing the mind, controlling impulses, recognizing that short-term turbulence is irrelevant when your compass points decades ahead. By noon, I was reviewing old notes, charts, and journals. Patterns emerged, not in prices or graphs, but in human behavior. Panic was contagious. Optimism was naive if untethered to analysis. I realized I had unknowingly become an observer of the human condition. Investing was no longer just about money. It was a study of psychology, of the subtle nudges that guide our choices without us realizing. Fear whispers, greed shouts, envy poisons, and yet the quiet, disciplined mind learns to treat them all as signals, not commands. That afternoon, I encountered a young investor in a local cafe. His eyes were bright with ambition but clouded with the common illusion that brilliance equates to success. He asked me, "How do you make money when the market is unpredictable?" I smiled, a knowing smile, and answered, "You make money when your mind is predictable." Confusion crossed his face. He wanted formulas, hacks, instant gratification. I shook my head, understanding all too well that the lesson is never easy. Wealth is built in silence, in patience, in resisting the urge to constantly do. As the sun dipped toward the horizon, I returned to my apartment. The city's chaos had not lessened, but I felt separate from it, not because I was superior, but because I had learned to step outside the compulsion. That evening, I began drafting a letter to my future self. I wrote about patience, discipline, and humility. I wrote about avoiding the siren songs of instant success. I wrote about the quiet victories that build empires over decades rather than hours. Night fell, and I lit a single lamp. Shadows stretched across the room, mirroring the long-term arc of life itself. I realized that investing is, at its core, a practice of patience, a test of character, and a measure of endurance. Those who endure learn to value the slow, compounding effect of time. Those who surrender chase fleeting highs and are often left empty-handed. In that quiet, I felt a sense of clarity I had not known before. Real wealth is rarely flashy. It is measured not in headlines or applause, but in the calm confidence that comes from mastering oneself. The world may scream, rush, and panic, but you, the disciplined mind, simply endure. You wait. You observe. You let time. The following morning, I awoke to the same relentless hum of the city, but my perspective had shifted. Every flashing headline, every trending stock, every social media post now seemed like background noise rather than a call to action. I realized the hardest part of wealth is not making money. It's ignoring the illusions that make ordinary people lose theirs. People don't fail because they lack intelligence. They fail because they cannot resist their own impulses. They react to envy, to fear, to the desire for instant approval. I poured a cup of coffee and reviewed a ledger I had kept for decades. It wasn't fancy, no algorithms, no predictive software, just simple notes recording decisions, mistakes, and outcomes. The patterns were consistent. Patience pays. Impulse destroys. Humility saves. Greed bankrupts. I had lived through the excitement of market frenzies, the siren calls of the latest hot tip, and the crushing despair of downturns. Each experience reinforced the same truth. Your temperament is more important than your IQ, your patience more valuable than your speed, and your character more enduring than any single profit. By mid-morning, I walked past a bank bustling with anxious customers. They hurried in and out, chasing approvals, loans, and investments as if speed were wisdom. I stopped to watch a man pacing outside, muttering numbers under his breath. He had all the tools, the information, the resources, but lacked one crucial skill: restraint. In investing, restraint is not a weakness, it is armor. Those who can resist the urge to follow the crowd are those who quietly survive, thrive, and eventually prosper. I sat down on a nearby bench and pulled out my journal. The lesson was simple, yet almost no one practices it. Avoid the traps that destroy more wealth than bad luck ever could. Fear, envy, and overconfidence are the unholy trinity that erodes fortune faster than any recession. Avoid them, and the compounding effect of time does the heavy lifting. Wealth doesn't require brilliance. It requires discipline, endurance, and the courage to be boringly consistent while everyone else chases drama. By afternoon, I was reflecting on my own journey. In my youth, I sought excitement, recognition, and validation. I thought I needed cleverness to succeed. Over time, I discovered the real secret. It isn't cleverness, it's self-mastery. Every fortune begins not with money, but with a mind disciplined enough to resist stupidity. The market doesn't punish those who fail to predict it. It punishes those who fail to govern themselves. Emotional impulses are far costlier than any market volatility. Evening arrived, and I returned to my apartment, the city alive with neon and noise. But within these walls, a different rhythm existed: patience, quiet, and purpose. I reviewed my notes, reinforcing the principles that guided decades of decisions. Time compounds, simplicity works, and integrity pays more than cunning. Character, I realized, is the true invisible compounder. It earns trust, attracts opportunity, and shields against folly. Without it, wealth is fragile, fleeting, and ultimately meaningless. With it, wealth becomes enduring, almost effortless in its accumulation. I set aside the ledger and closed my eyes. The day's lessons were clear. To grow wealth, one must first cultivate patience, discipline, and humility. To endure, one must resist envy, fear, and impulsiveness. To build lasting fortune, one must act as a farmer, not a hunter, planting, tending, and waiting for decades, rather than chasing the immediate thrill of a kill. Success is not a sprint. It is a quiet, relentless march. Night had settled over the city, casting long shadows through the streets and alleyways. I sat by the window, gazing at the lights flickering in distant skyscrapers, each representing ambition, struggle, and desire. Money is easy to admire from afar, but understanding it, truly understanding it, requires solitude, reflection, and a willingness to confront uncomfortable truths about human nature. Most people never take this journey. They are too distracted by noise, excitement, or the approval of others. I thought about the countless individuals I had met over the years, brilliant, educated, talented, yet perennially caught in cycles of loss, regret, and self-deception. The irony is cruel but consistent. Those who know the least about themselves often think they know the most about money. True mastery, however, is invisible. It manifests in quiet decisions, in restraint, in the refusal to be seduced by the allure of the moment. The compounding effect is not just financial, it shapes life itself. I reflected on my own mistakes as well. From reckless trades to miscalculated investments, I had made a lot, but none of them had broken me. Why? Because I had learned the hardest lesson of all. If you maintain perspective, you can survive failure. It's not the loss itself, but the reaction that defines us. Some flee, some despair, some blindly resist, but the wise pause, evaluate, and adapt. Discipline and common sense transform mistakes into lessons, and lessons into resilience. By midnight, the city had fallen into an almost sacred silence. While the outside world quieted, my mind wandered through decades of experience. I realized that wealth isn't just about accumulating money. It's about the freedom to think, act, and live without being enslaved by impulse. Freedom is the ultimate foundation of patience, common sense, and wisdom. I closed the window, dimmed the lights, and turned to my ledger one last time. Each entry was a story, a lesson, a reminder that wealth begins in the mind long before it appears in the bank. There are no shortcuts. There was no magic formula. There was only the consistent, unpretentious practice of self-control, repeated daily, monthly, and yearly. As sleep overtook me, I carried an unshakable truth. Wealth, if it is to endure, must be built not only with intelligence, but also with character. And once earned, character becomes the most reliable asset, immune to panic, immune to envy, and capable of growing silently, almost invisibly, like roots beneath the surface. The world may celebrate the bold, the flamboyant, the dramatic, but true winners are those who master themselves first. And in that quiet mastery, I understood the greatest secret overlooked by many. Time, patience, and honesty outlast even the wildest market winds. Everything else is fleeting.